Hello, everyone. Rob Wolf from the Loan Factory, and you are watching the Lone Wolf podcast. You could also be listening to it as well, but I am televising this on YouTube. Anyway, that's loan spelled Loan, as in borrow money. The show talks about mortgages, but I do throw some real estate mix into it every now and then. You can reach me at rob.wolf at loanfactory.com. Or call me on my cell, 727-366-5722. I'm not a bank. I'm available after hours and on the weekends. I believe in the ABCs. Always be communicating. I am a licensed loan officer here in the Sunshine State of Florida, where I vacation every year, the Rocky Mountain State of Colorado, and also where I grew up in Pennsylvania. If you're looking for a loan in some other state, let me know. Loan Factory is licensed in 47 states, and I can hook you up with a fellow loan officer there. This podcast is just me. However, I do have guests every now and then, and it could be a real estate agent, title company, insurance company, whatever it may be, as long as it's affiliated with the mortgage loan process. If you want to be a guest sometime, let me know, and we could work something out, and I'll get you on here sometime. I keep these podcasts under 30 minutes. And they are aired every night or every Wednesday night at 9 p.m. Now, if you miss a podcast, no worries. Just go to my link, www.thelonewolfpodcast.com, and you can see the episode or previous episodes. Just remember that's loan spelled Loan, as in borrow money. And make sure you do Google Chrome in your search engine. Okay? So this week's episode, I'm going to talk about some loans that are not too familiar to many people. These fall into the non-QM category. Non-QM, non-qualified mortgage. Now, a qualified mortgage is what we're all familiar with. Those are the conventional loans, FHA, VA. We go to the bank at a 30-year fixed. That's a qualified mortgage. These fall out of that range for whatever rhyme or reason. And the two I'm going to talk about are foreign national and ITIN, individual tax identification number. Okay, so, and before I get into the weeds, let me just explain that there are hundreds of non-QM investors / lenders out there. Okay, and they all have guidelines, and some may be different than others. So I am going to be giving you guidelines that is from one of my lenders I deal with. I'm a broker. However, for those out there that are looking for a foreign national or an ITIN loan, and you go to a lender that's a broker, you're not going to get these at a bank, by the way, Wells Fargo, what have you. So you do need to go through a broker or some private lender. If your lender says, I can't help you, don't give up. You could find another lender that might be able to help you out, such as down payment, reserve requirements, or whatever it may be. And I'll talk about those as we move forward. Okay, so let's talk about the first one, foreign national. Okay, this is someone that does not live here in the States. Okay, for example, I live in Florida, and we have a lot of people that come down from Canada. We call them snowbirds. They come down 3-4 months of the year. They have a second home down here, and then they go back to Canada for 8 months of the year, whatever it may be. Well, what if they want to buy an investment property? That's where this loan comes into place. Okay, this is investment only. It's not a primary or secondary home. Now, you do need, a valid passport, valid visa, that you can come in and out of the country as you please. There's no time limit on your visa. Now, I will say this, if your visa or passport is getting ready to expire, like within 6 months, I highly recommend that you reapply for an extension and you save that receipt, because the underwriter is going to want to see it if you're in the process of looking for an investment property. Otherwise, you can't come to the States. Okay, so make sure that the renewal is up to date. Now, couple things about these. These are for single-family homes, condos, townhomes, not manufactured homes. Okay, so if it's a modular, manufactured, or mobile, that won't work in this situation. Now, the minimum on these loans is 150,000 and the max is 2 million. Now, you might be wondering or asking, okay, why is it 150,000 minimum? Well, I can tell you, firsthand, these loans to get pre-approved and to go through the process are very labor intensive. And the bottom line is the lender needs to make money, and there's just not much money made less than 150,000. And honestly, I don't think you're going to find anything, an investment property, for less than $150,000 anyway. So that's the loan limit, so to say. And you're going to have to put 25% down on these. Okay. Again, you might be able to find a lender that is 20%. I haven't seen any 15%. So make sure you got that in mind, a heavy down payment. Your credit score, if there's a credit score that you could provide from your country, would be 680. If not, we default, to a 680. For reserves, you're going to need 12 months of reserves. Reserves is principal, interest, taxes, insurance, association fees. And that is after you pay the down payment and closing costs on the property. Okay, so for example, if your property is going to cost you $3,000 a month times 12 months, you've got to have $36,000 in that account. Okay, you also need trade lines. Okay, so we need 2 trade lines, credit cards, with a 24-year history, or 3 trade lines that have a 12-month history. And speaking of trade lines and credit cards, if you have a credit event, that's not going to work. You cannot have any credit like late payments. Now, how would we know that? Well, if you have a first investment, and this is going to be your second investment property, if you were late on one other property, then that would not work. Now, and as far as foreclosures, Chapter 7s, 11s, 13s, you need to be seasoned 4 years. I've seen some that have been 3 years. So at the absolute minimum, plan on 3 years, okay, to get past that seasoning period. Now, you can't use gift funds in this. It's got to be all of your, money, so to say. Now, there's no DTI, debt to income, with these types of loans. And what they do is they call it the DSCR, debt service coverage ratio, or also called investor cash flow. And for those that have listened to me know that that's another, people here in the States can do an investor cash flow as well. So you ask, how does that work? Well, if you've got a property of interest, it could be a short-term rental that the appraiser will go through, and it could be a long-term rental. I forget the term. I think it's, what the heck is the name of that? Anyway, I lost my train of thought. It's like an air DNA. I think that's what it's called. The appraiser will look and see what is that property going to rent for, either on the short-term basis or the yearly basis. So let's just say for conversation piece, they say $3,000 a month is what the rent will bring in. Okay. If your mortgage payment is below that, let's say $2,700, okay, that would be above 1 because you're bringing in more rent than what the payment is. Okay. $2,700 payment, $3,000 rental income, you got positive. You're above 1. If he thinks the rental is $3,000, but the payments are going to be $3,300, you're below water, below that 1. You can still get the loan. Okay. It's got to be at least 0.75. Okay. So I don't have the numbers in front of me, but if the rent is $3,000, then 25% of that is, I'm going to do the math real quick, is about $800. So if you're collecting $2,300, $2,400, you can still get the loan. Now, keep in mind, you're going to have to increase your down payment then. The lender is going to want more security that you're going to still be able to satisfy the loan. So think of it as risk. Okay, it's all about the risk. So let's go back to the monthly payments and what it means to you. So I'm going to go off on a little streak here, a little path, and talk about this because I talk about this with my other borrowers that are thinking of this DSCR investor cash flow. Okay, the lender in this case says, okay, it's going to collect $3,000 a month. And let's say your monthly bill is going to be $2,700. Okay, that's better than 10%. So you'd think that's a pretty good return. Even the stock market, that's better than the stock market sometimes. Well, that's $300 a month if it's filled 12 months of the year. Okay, what are you going to do for vacancies? What are you going to do for repair and maintenance? What are you going to do if they trash the place? Okay, I had rental properties in Illinois. Some tenants, let's face it, damage the property and we've got to pay for that. Okay, so keep that in the back of your mind that as you go through this process, you have a budget to account for this. And that's part of the reason why the lenders require so much in reserves. Okay, so we've got that. The debt service coverage ratio is really what's going to qualify you or not, with this loan. Now, the other part are the assets that you have. So that's your savings. Okay, so how are you going to provide these savings? You're going to show, obviously checking and savings, and that's fully liquid, so that'd be 100%. If you've got a 401k, an IRA, something like that, we can count 70% of that with your assets. So keep that in mind for your reserves. Now, there are prepayment penalties on these types of loans, and they can vary anywhere from 1 to 5 years. So you'd have to check, with your lender. But hopefully that gives you a broad base of how the foreign national loans work. Okay. So again, there's no income documentation. It's kind of alternate doc is another way of putting it, that we just want to see the reserves, check your credit, and then we may have to get a certified letter from a bank or institution verifying your funds, and typically they want the funds seasoned in a U.S. bank, for 30 days minimum before it gets to closing. Okay, so keep that in mind. So the second one I'm going to go to is ITIN, Individual Tax Identification Number. So who is that for? Well, these are people that come to this country legally and they get an ITIN number from the government. They don't have a Social Security card yet, but they are law-abiding and they pay their taxes. And typically, these are people that have what we call as a green card. Okay. Now, for documentation, we would ask for the ITIN card. You probably have a driver's license here in the States. And if you don't, then there's probably some other government ID that we would require. Now, these types of loans can be your primary house, a secondary house, or an investment property. Similar to foreign national, no manufactured homes. It does have to be a single family residence. It could be a quad, triplex, or duplex, condo, or a townhouse. And these are fixed rates, be 15 or 30 year. Okay. The loan amount, similar. It's $150,000, like the foreign national. The max is $1.5 million on these, and your credit score needs to be 660. Now, if it's your first time home, it's a little higher, 680. Okay, so make sure we got that credit up there. And you will need to put 20% down. Okay. Now, trade lines, same as foreign national. It's 2 trade lines within a 24-month period, or that go 24 months, or 3 trade lines that are 12 months. Okay, so as far as housing payments, if you've already got an existing home, they allow 1 late payment of 30 days in 12 months. If you went to 60 days or 90 days, that's not going to work. Okay, so you want to make sure you get that seasoning done. Now, if you did have to claim foreclosure or some bankruptcy, Chapter 7, 11, 13, that's going to be 3 years seasoning as well. All right. Now, the DTI for these is 43%. Now, they can vary a little bit depending on how much you have in reserves. So if you go up to 50%, then we'll need more in reserves. Okay. Now, they start off with 6 months worth of reserves. But if your DTI is higher, then they probably want 9 or 12 months worth of reserves. Okay, you follow? So gift funds are allowed, but they can't cover everything. So the borrower, they need to at least kick in 5%, which in reality, if the down payment's 20%, then even a gift of 15% of a down payment is pretty nice. You just have to put 5% plus the closing cost. Okay. So just keep that in mind. You can't have the gift pay for the total down payment and all the closing cost. All right. Speaking of reserves, similar to the Foreign National, you've got your checking and savings account. That's totally liquid. That's 100%. If you've got an IRA, a 401k, some retirement, we count 70% of that. Reason being is because if you withdraw it, you got to pay taxes on it. And if you own a business, we can do business funds. That's getting a little more detailed. You would have to own at least 25% of the business. We would have to get a letter from the CPA saying the funds being withdrawn will not affect the business for the next 12, 24 months, whatever that may be. Okay. So keep that in mind. So let's talk about how we get qualified for this. Okay. Let's look at the income. The income, now the easiest is a W-2. Okay. You work for corporate America. They give you a W-2. It's very similar to anyone else in the States going through a conventional loan program. Okay. So we work that out. Or if you're self-employed, then, we look at 2 years worth of taxes and we average out the 2 years, and, we have a monthly average that we figure out, and that's what your gross income would be. Now, this gets a little interesting, I guess you could say. If your 2 years taxes are decreasing, we would look at the lower amount. Okay. If they're increasing, so let's say last year you had, and I'll just say $500,000 in gross income, but the year before you had 400,000. Okay. You're increasing now. So then we would average it. So we would average, okay, that's 450,000 for the year divided by 12 months. And that's, what's that, $37,000, $38,000 a month gross income. Okay. So now, honestly, most people that are self-employed, they use the deductions to their advantage. So most times when I see self-employed people, their net income is minimal. It could be $10,000, $20,000, $30,000, even $50,000. Well, that's not going to be enough money to get you a house. So now we need to think of some alternative ways. And now we look at a bank statement. Okay, let's look at your business bank statement for the last 12 months at least, preferably 24 months of your deposits coming in to your business account. Okay, and what we do is we average out those deposits. Now, there's 3 ways that we can do this. Okay, so hang with me. So the straightforward method is 50% expense. Okay, whatever your bank deposits are, we average them out. Same scenario. If it's decreasing in value, we'll probably look at the lower end. If it's increasing over a 2-year period, we average it out. But whatever your yearly amount is, we take 50% of that. Okay, and that's what your gross income. So, for example, if you are averaging $1.2 million a year of receipts coming into your business, divided by 12 is $120,000 a month. Well, you have to take 50% of that, which is $60,000. Okay, does that make sense? You take half of the deposits, and that's what we can use for your gross income. Now, the other side to that is we could talk to your CPA, someone that does your taxes, and we look at your P&L statement. Now, this is a little tricky, but the CPA would give us a letter stating that the receipts on the P&L equal X, whatever that number is. If your bank statement deposits are at least 80% of that, that's good to go. Then we look at the lower amount of which year it is. Now, honestly, I don't know why they say it only has to be 80% bank deposits of the P&L. Maybe there's forms of payment that never go into the bank. I don't know, but that's the gist of it. So if you made 1.2 million one year and 1 million, 300,000 the other year, then we would look at that 1.2 million. Okay. And that's what we would base your gross income off of. So hopefully that, makes sense. Then the other one is, so let me go back. So the P&L, there's going to be a bottom line number of net income, almost like the taxes. Okay, so I kind of misspoke there. So the gross receipts coming in was 1 million, and the deposits may have been 800,000. Okay, that's good. That doesn't mean we look at the gross deposits. So now we look at the net income on your P&L statement, and whatever that is, whatever the lower one is, that's what we can use. Okay, so hopefully I didn't confuse you there. The other one is your accountant has an expense statement of your business. So remember I said the quick and easy way is 50%. Well, there might be a business that you have less expenses. So getting back to, that $1.2 million of gross income, maybe someone has 45% of that, not the 50%. So they would be bringing home more money and would bring their borrowing power higher. So my point being is that you have bank statements. Get with your lender to find out which one is best for you. Okay, it may not be the 50%. It could be go to the P&L statement and compare the receipts, or it might be see if he can do the expense statement, and it might be different than the 50%. Okay, so hopefully that helps out. So that covers the two loans. I know this is a little different than the average loans out there that we're more commonly used to, but there are people out there that are looking to get into home ownership, and they may feel that they're lost. They don't have a way. There is a way, to get into home ownership if you're not a U.S. citizen. Okay, so hit me up anytime. Once again, I want to thank you for watching my podcast, and you can find me rob.wolf at loanfactory.com. You want to drop me an email. Again, my cell, 727-366-5722. And my podcast is www.thelonewolfpodcast.com. All right, folks. Again, thanks for watching. Thanks for listening. And if you have any questions, just hit me up anytime. I'll be more than happy to help out. All right. Have a great night.